Alright, today we'll talk about my top 5 worst trading habits, things you should never, ever do in trading. Some things that I've done before, some things that I've not done before too much, but things that you shouldn't do in any case, and I'm trying to work hard on not doing myself every single day in trading. I think that's a good enough intro, so let's dive right in. Alright man, so the first thing you should never do in trading is pretty simple, but I want to state it here because people don't know or they don't understand it. Or sometimes they forget about it. But the first thing is, don't increase your risk after losses. It's a very slippery slope when you start to increase your risk after you have a few losses. You want to get back to work even, you want to get back to profit. Then you increase your risk to be able to skip those losses you had in the past. You got to realize that when you have a loss, the next trades could also be losses, and they will likely be losses because your mindset is affected by the loss you have. So if you increase the risk, you just make things a lot worse for yourself. Then it goes, if you do the opposite, you increase the risk after wins. You have many wins, you feel good about yourself, you add more money to your trades, you take a big trade, you take a trade that's not within your trading plan, then you lose all your passwords you had. A lot of people are in that circle where they have really good wins because they follow a plan really well and they stick to it and they're good. Then they take a stupid trade because they follow the rules and they want to feel good about themselves, they feel like superheroes, then they lose all the money from the past trades. Don't fall into this. This is a common mistake. I've been into this one myself, so be careful. What you could do if you really want to be smart about your drawdowns is reduce your risk when you have a few losses in a row. So if you like at 3 losses, 4 losses, look at this and you back this, how many losses you have on average in a row, then you can start to reduce your risk a little bit. So maybe you're risking 1% per trade. After 4 losses, you go down to 0.5% or 0.25% until you get back to break even. When you get back to break even, bring back your risk to normal risk and continue forward. If you have a series of wins, you could add a bit more risk, but not too much. Don't like go overboard and like risk a 10% in the trade because you feel good. Maybe just add like 0.25% after you have 4 or 5 wins. Look at your backtest for when to do this exactly and when it makes sense to do it. But that could be a way to do it well, is to increase your risk as you win, reduce your risk as you lose, so that your drawdowns feel smaller and your big run that are winners tend to bring your account forward a bit more than they would do usually. A good way to do things. Alright, so at the end of this video here, I've got a free bonus for you, a free training. I'm going to share the details of it, so stick till the end and you'll see how that works out. If you want to go beyond that video here, learn some more things and really apply this better, stick till the end. You'll see all the details of that to be able to maximize this video here and get the best results for your trading. Alright, number 2, that things you should never do, a mistake I've made for a long time, is changing role of the strategy halfway through. So you have a good run, then you have a few losses and you feel, oh, this rule doesn't work, I'm going to change it. I should do something different. I should not look at the trend, I should look at this factor instead. Then you change your rules, right? Is strategy by itself, like think about when a business has a strategy and they follow that plan to market their product or something, they're not going to change how they do things like from day to day. They should have a plan that they go for and they use for like a year or maybe even like 5 years. They're not going to change intraday or day-to-day how they do things. If there's a giant catastrophic factor that affects everything, change the whole story, yeah, they could change a few things, but other than that, the strategy stays the same. And the way a business achieves their goals is with a strategy, with a plan that they follow through all the time. I had this guy ask me on Instagram a few days ago. Follow my Instagram, by the way, if you don't follow it yet. You can chat there if you want. That guy asked me, how do you get consistent results with your trading, like on a monthly basis? Like, how do you not have big drawdowns, ups and downs all the time? I told him it's pretty simple. I follow my strategy and I just stick to it, stick to the rules. Then he said, well, you never get bored of the rules? And then I simply answered, well, no, it's a business. If you get bored of the rules because you're looking for entertainment out of trading, and that's not the case for me. I'm trading for money, to make it a business, to make it consistent. Therefore, I gotta stick to my rules. I cannot just change things day to day, apply new rules, look for new strategies every single day, because I want to stick to my strategy for a year, 5 years, and maybe even more. Doesn't mean I never tweak things a little bit, but I don't change complete rules for the sake of changing rules because I want to have a better edge that day or things are different. That's not how I do things. If you're always in the state of changing the rules because you have a few losing trades, that cycle is a bad cycle to be in. Be careful. Alright, number 3 is not doing performance reviews. Now this is so big, so important for being able to improve your trading. Back when I was starting to get to break even in trading, I had some good results, some bad results. I was really break even, like winning, losing, not making any money on a yearly basis, for example. The first thing I did is every Sunday, I would sit down, look at my charts, look at all the trades I've taken the past week, and analyze them, rank them. Are they good trades? Are they bad trade? Meaning, do they follow my plan? Do they not follow my plan? Did I make any mistakes there? And just look at the results. And sometimes I have losing weeks. It was tough to go back and look at these trades on losing weeks. Then sometimes I had winning weeks. It was also tough to go back on winning weeks. Because what you want to do when you win, you want to celebrate, you want to feel good, you don't want to do your work. I had to go back on the chart, look at all these trades every week, and classify them in my journal. Now, that did two things. First of all, it helped me to figure out where I was losing money. Like, what were the trades I was making that were stupid, that were bringing my account down, that I could maybe try to fix or try to remove from my account eventually. And it gave me also an indication of what were the good trades I was taking that I should take more of. Was I also, as a third thing, missing any trade in the market that I could maybe have taken that past week? Because I was busy, because I was second guessing myself. These trades could account for a big percent of your profit that you don't get. And if you were to take them, you could get a much better result. I never missed a week. I did this for about 6 months. And after 6 months, I got profitable results in trading. All because I was going back on the trades every single week and figuring out how I was performing and doing that performance review. This is a very big factor to success. Then I stopped doing it for a while because I felt good about myself. I was profitable and my results went downhill from there. I had to go back and do these reviews again because I felt I didn't need them anymore and I still needed them. So I went back to them after a few months, did them again. My results started to go back up and get back to normal after that. Then I never stopped doing that since then. Every single Sunday, I do my weekly review. I go through all the charts, all the trades, my log, my journal, figure out what trades I took, how these trades were, and I classify them to make sure I have good trades in my journal and I don't have too many of these bad trades on a weekly basis. All right, number 4, I'm gonna say this here out loud because it's not clear for people, but you cannot copy and paste a strategy. Meaning if you take something on YouTube and you copy it, paste, and you use it on your own account directly, you don't tweak anything, you don't make it your own, you just copy and paste without even testing it, it's rarely going to work well for you. I found this the hard way, by the way. I used to read a lot of books about trading back in my early journey of trading. I used to read all these books from like really credible authors that have been out for many, many years, and these books were awesome. I was learning a lot from them. But when it came to apply this to the market, I would just use the strategies that were in the book, or these principles, trade them right away, and I would lose money. I couldn't understand why. I was trading them for like a week, maybe sometimes a month, 2 months, and my account was just going down. Why? Well, it's because you gotta test it out first. Some of these strategies don't work anymore, or maybe you're just applying it wrong, and you should be applying it a different way slightly that could get you good results. Or maybe you gotta add your own touch, or maybe it doesn't match your personality. Maybe you missed all the trades you're supposed to take because that strategy doesn't work for you. You're not the right person for it, and therefore you won't be able to trade it well. So you gotta first of all go back and test it out, and then see if you can actually take the trades live or on a demo account, and do a bit of work before you go live with that strategy in the market. The best strategy out there isn't the one that makes the most money or the one that's most flashy on YouTube. It's actually the one that you like the most and that fits you the most and that you tweak to make your own. Your own strategy is always the best for you. The things out there are not good enough for you because you didn't make them your own and you didn't tweak them to make it customized to your own personality in the market. Very important to do that first. Alright, this is a part I want you to not skip right here. Number 5, the 5th mistake I've been making for a long time, and I still make it sometimes these days, is you gotta know your strength and your weaknesses in the market. Now, what I mean by this is we do this with all our students. We give them a SWOT analysis, the same thing they use in corporate businesses. So a strength, weakness, opportunity, and threat analysis. They fill this out on their own. And I've got a whole video on this and how to do it. If you want to check it out, it's a free video. Check out below. I'll even give you a template to fill this out on your own and figure out how to fill out your SWOT analysis. Michael Tama did this. So it's a really good tool to be able to figure out where you're good at, where you're not good at, and what things you can do to improve really quickly. So you figure out what you're good at, what you're not good at, and what things could also affect you. Once you have this on paper, then you really understand your trading business. You understand where you could do things better, you understand where you fall short, and how to use this to level up your results. For a very long time, I thought I would be like a really good scalper, a really good day trader, and I still do a bit of day trading from time to time. But for my schedule, which is a threat out there, I have a business I have to run, this I have to trade, that takes a lot of time. So I need to be able to trade within that framework. And for me, that's kind of a limitation I've got for myself. So using daily charts, I have much better results. Some of the people is different. Some people have a full-time job. You got to figure out how to adapt trading to your full-time job. Some people are very impatient, but they're also very focused when they trade intraday, when they scalp. They got to figure out how to adapt this to their own trading style. So check out the video below. It's going to be the first link in the description below. You can check it out. We'll go in depth on how to fill out that SWOT analysis, understand your strengths, your weaknesses, how to use this for trading. I'll give you a free template. You can check it out. And hopefully you can take that next step to improve your trading. If you want to go forward with this, check out this video next. You think you will like it. And I'll catch you back there. Ciao.